rand sitting at 7.18. We kept hearing about the 7.20 level. Do you think we're going to breach it this week? And also just keeping in mind that we have held our own over the last couple of sessions.
Hi, good afternoon, Eleni. Yeah, 7.20 seems to be holding it for now, certainly. I mean, we're getting closer as we speak, up here at around 7.18. But yeah, it's had a couple of attempts up there. Doesn't seem to be getting through. If it does, obviously, yeah, we could expect a move higher. For the time being, though, there's been, an excess of dollar buying in the market, and still, it hasn't really reflected in the price. So, it is expected possibly just to be rangy, and if anything, if it doesn't break the 7.20, strengthen a little bit back.
Well, James, I alluded to the inflation outlook and the picture that is going to be painted by the ECB President Jean-Claude Trichet. How much of a concern is this for you right now? Because on the other end of the pond, Fed Chairman Ben Bernanke says all this talk of inflation is going to be very pertinent for the way that markets are going to be faring, but inflation hasn't fed through into the US market as yet.
No. Well, one thing the American Reserve look to do is create inflation expectations. So that's a positive for them. They're hoping to create that. A few months ago, they were sitting with the prospect of disinflation. So any inflationary prospects there, they would take as quite positive. In Europe, on the other hand, they're sitting, as you said earlier, with inflation just above the band. So they're in a bit of a quandary right now, obviously, with default concerns within the European Union. They're not really in a position to hike rates right now. So a little bit of a sticky issue right there. It's going to be interesting this afternoon just to hear what Trichet has to say.
Well, looking at the interest rate front and the fact that we have seen much higher commodity prices, with copper hitting new record highs of $9,988 a ton. We're seeing wheat futures at around 2.5-year highs. Sugar prices rallying, food prices as a whole much higher as well. James, what is the bond market pricing in so far when it comes to the inflationary outlook?
As you say, those are all inflation concerns, and they seem to be growing as we speak, with Egypt also not helping. But as far as what are we expecting on the interest rate front, well, this year's seen quite a turnaround with regards to expectations. Initially, the end of last year, potential for further cuts, whereas that's turned 180 at the moment. And just looking at the FRA market, that's saying that out just past the September meeting of the MPC this year, we can expect a 50 basis point hike already. And furthermore, after November, another 50% chance almost of another 50 basis hike. So it's quite well priced at the moment for those expectations, just showing the concerns that the market has over those inflation pressures that are beginning to build and may just affect the MPC's inflation forecast going forward. Also
interesting to note, with all these inflation fears that have come to the fore, we still have gold prices sort of stuck at the range of $1,335 an ounce. In fact, gold is down around 0.4%. Platinum also shedding some ground today. Oil prices obviously much higher. We're sitting at around $103 a barrel, and this has got to do with the tensions and supply concerns coming through from the Middle East. But if there is such a huge fear of inflation, James, why is gold not rallying?
It's an interesting question. You could argue that gold has perhaps been the hedge or store of value of choice at the end of last year, or for most of last year, so having run quite hard there. So perhaps it's coming through in the other commodity prices, and that could argue that the holdings in gold aren't about to change. So I think the eyes obviously are mainly on oil at this point with regards to the tensions in the Middle East.
James, let's turn our attention once again to the rand. We are going to be seeing those reserves being released next week, Monday, and that is also going to be relatively key in terms of rand direction. A lot of reports that the Reserve Bank has been accumulating reserves as it promised towards the end of last year. Is this going to have a significant impact on the local currency? Because as we alluded to earlier, it is still showing resistance.
I wouldn't say a significant effect, but it's certainly going to be of interest to see just to what extent any dollar accumulation by the Reserve Bank has taken fold in the market. So we will look at that quite closely, whether or not it affects the levels. I mean, it would need to be a big surprise, but Yeah, I think it's more a point of interest just to see what the stance is of the Reserve Bank with regards to the currency at the moment.
James, also touching on the UK PMI, so we're sitting at 54.5 in Jan, from below 50 in December. Globally, ISM numbers looking good. Manufacturing also recovering here in South Africa. Something to take note of is that input prices are rising and inventories are looking far better as well. It's also going to be quite telling in terms of market direction for you.
Yeah, I mean, touching on our own manufacturing data that came out this week, certainly an expansionary number, so that was positive. The majority of that coming through in sales orders and inventory increases. So that's the positive to look at it. The negative, on the other hand, is that, employment is still not gaining. It's still below that 50 point. So we've got, as you say, input costs increasing into manufacturing, but lower employment. So that's a little bit of a concern. Also, perhaps the growth in inventories. One wonders, is it as a result of expected increase in activity, or are we not? Are the companies not actually selling their production?